in the banking industry, one of the things, there's a big difference in the banking industry is something called sticky money and non-sticky money. I don't know how many people know how banking industry works, but the way banks lend money out, they have money that they can hold for a certain period of time, and the money that they're sitting for holding for a certain period of time, they can go and lend it out at interest. So some people coined it as sticky money. For instance, if someone has a bank account with $100 million in it, and it never goes below $10 million, the bank can say, well, for the last 6 months, they kept $10 million in there consecutively, we can go lend that $10 million out now because they're never gonna go below that $10 million. That's sticky money. Other types of sticky money are CDs and other things of that sort. There's something called sticky money. In a business, there's no real sticky money, but what you do have in a business is you have a client that keeps coming back. And a client that keeps coming back generates cash flow. The biggest thing for a business to keep operational is cash flow. You have employees, you gotta pay employees every single week. Every bi-weekly, depending on your paying, or monthly, but you gotta make payroll, you gotta pay rent, you gotta pay yourself, you gotta pay your cars, you gotta pay your programmers, you gotta pay everything. It's gotta keep going. You need cash flow. A continuous client will bring you cash flow. Why? Because they keep coming back to you and bringing more work. So you can say, oh, these guys do 5 projects a year. I can basically bank on 5 projects a year. And therefore I know that that generates X amount of revenue. And therefore I can now hire another employee, or I can give someone a raise. I can do something based on that analysis, which is cash flow.